You're listening to UCW Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
Greed, for lack of a better word, is good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine when it hurts.
You know what it takes to sell real estate?
It takes brass.
I've fallen, and I can't get up.
All right, welcome to Money Never Sleeps, the show where we touch on everything and anything that impacts the flow of money from around the corner to around the world. And I want to thank you for taking the time to join us today. And as I've been mentioning all week, we are working on making Money Never Sleeps a daily show, and we're not just going to be touching on current events and the ups and downs of particular stocks, but we're also going to be putting a spotlight on companies that may be of interest to our listeners. Some may be public, some may be private, but they'll be in industries of interest to our listeners. Not all spotlights will be favorable, but they will express my opinion on the company or industry. Now, today we're going to be touching on gold and oil, as well as the $15 per hour minimum wage ruling in New York that may be coming down the pike soon enough in New York. Now, before we get into that, make sure that you take the opportunity to check out Super Rich on CNBC. And this is where, they take you behind the scenes. They give you a sneak peek into the lives of the uber, super duper wealthy. And it's a wild ride. It's a pretty cool show. And it may inspire you to want a little more and to kind of push the envelope on your end to get that quadrillion-dollar car. But from mansions and cars to the to food and travel, they have it all, and the Super Rich team really delivers the goods to their viewers, so it's definitely worth a watch. You can go to CNBC and find out when it comes on. Also, take the time to show your support for a true warrior, a true Wonder Woman in Lynn Tilton. She's an entrepreneur amongst entrepreneurs. She's the epitome of the American dream. She built an empire from nothing and created close to 700,000 plus jobs here in the United States since inception. And she keeps Americans working. And she kept manufacturing in this country. There were some of her companies were actually going to go out of business or go overseas, and she went in there and kept them here, and they're flourishing right now and keeping people working. So you can find out more about what she's done and what she's doing at sheforall.com. That's sheforall.com. Now, I want to start off with gold. Look, you have so many people trying to point the finger on geopolitical situations that's driving gold down, while others are blaming a strong dollar, inevitable Fed hike, and a number of other things. Whether it's China, Russia, this, that, Iran. They're pointing the finger all over the place. Let me just put my own spin on it. And again, this is the way I view it. I've been involved in the physical gold arena for many years, and I'm not talking about trading futures. Okay, I'm talking about the physical gold. So it's me being in that arena has given me a greater insight into the gold markets. Firstly, as I mentioned on Twitter yesterday, the perceived value of gold is not what it used to be. And meaning that for a very long time, sovereign nations hoarded gold as a backing, for their currency. The U.S. did that, until we came off the gold standard. But that was perceived to be of true value of backing the currency or above currency or as a backup. So look, most countries did this. And then, as you can see, the reasoning for hoarding gold really isn't doing anything for these countries at this point. The world is getting smaller, debt is climbing, and the Stone Age is over. We're in the digital age. And you can see more value in technology than in gold, and that's a fact. Now I'm not saying that gold is going to drop like a rock and go to nothing. No, not at all, not at all. But what I am saying is that it can, and I see it drifting down way below where it is today, because that perceived value is not there, in my opinion. And honestly, I think that gold will have a greater use in computers and other hardware and in the luxury as a luxury item than as backing a currency. So I think that we're going to see something really happening in the gold arena. As people begin to wake up. Gold was little under $1,100 per troy ounce today, and look, if we saw gold drop into the $800 range, I know no one wants to hear it, but this is what I see. But if we saw it drop into the $800 range as a start in 2015, I would not be shocked at all. And here goes some interesting information. It costs I don't know, between $300, maybe $400 to extract 1 ounce of gold out of the ground. I'm not talking about alluvial gold. I'm talking about gold out of the ground that they're digging and mining. Okay, so the miners, they're not going to be as impacted as the media is saying. Of course, they're going to lose. I mean, if gold is down from $1,600 to $1,100 to $1,000 per troy ounce, yeah, they're losing on that end. But but they're losing that excess. They're just not going to get as fat as they've been. That's all. That's the difference. So you're not going to see the profits as high as they were. But as far as them losing money, as long as they're extracting the gold and it's coming out of the ground, I don't see them being at a loss, unless they overextended themselves way too much, which is possible. But again, I don't run those companies. I'm just giving my opinion on what I see. And I know, the cost with extracting gold out of the ground. And basically, again, do I see gold bouncing up as some people think? No, I'm not that much of an optimist. I'm more of a realist, and I see what's happening on a global scale. So again, if it came down to within the $800 range, I wouldn't be shocked. And I'm not talking about overnight. I'm talking about at some point during the course of 2015. And again, if gold is being utilized in computers and other components and other hardware, there's still a need for the commodity. So it's not like it's disappearing. I'm just giving a view of the use of the metal. Now, I want to get into oil, and honestly, oil is a crapshoot. With the U.S. extracting oil on a massive scale, fracking in motion, and supply growing globally, especially if that deal happens with Iran and they get into the game again, you're going to have more oil out there, and it becomes a supply and demand situation. So, basically you can kind of, put the pieces of the puzzle together. The refineries, they don't really lose on this bet. Even though you think they may, because no matter what oil's priced at, their main job is to create various classes of petroleum products, and that's what they do. They refine the oil, they make these different classes of petroleum products such as gasoline and so on and so forth. They make a profit off of this, and not on the sale of the actual oil. So. That, again, the impact on them may not be as great. But I need to add this, because what the refinery specializes in makes a really big difference in their survival. Because refineries are set up to do a particular process. And if the product needs to change, or the oil that's coming in is a different grade of oil, then then the refinery has to change, and that is very costly. So that is one of the caveats as far as the refining business goes. If the oil, the grade of oil is different, the refinery has to be set up to refine that grade of oil. If it's not, it won't be able to refine it. So that's the big thing with refineries. But if they are equipped to refine certain oil, then and there's an abundance of it, they'll be fine. Okay, so I just need to add that so you understand how that works. And look, I won't speculate as to where oil will drift to. But if I had to take an educated guess, then I'd say it being way south of $45 a barrel would not shock me at all if that happened this year, even going into the winter months. It wouldn't be a shock to me. So, but anyway, so that's my view on gold and oil. And what I want to do, what we're going to do right now is we're going to take a quick break, and when we come back, I will be talking about the minimum wage hike in New York and what impact I think it will have overall. So stay with us. We'll be right back with you on Money Never Sleeps.
Hi, everyone. John and Pete Najarian here at the NASDAQ with some news you do not want to miss.
As option floor traders, CNBC contributors, and co-founders of OptionMonster.com, people always want to know our secrets for trading the options.
So we wrote an entire book on it. And today, to celebrate the book launch, we're giving away a limited number of these books for free. All you have to do is cover shipping and handling.
Learn how you can use options like we do to make more income with less capital.
To reduce your investment risks.
And to make money regardless of which way the market's moving.
It's all right here in this book, and today we're giving it away to you for free.
Equity options today are hailed as one of the most successful financial products to be introduced in modern times. You have to learn to profit from them.
This one book could dramatically increase your investment returns.
And today, it's free.
So pick up that phone and call now.
Call 1-800-961-1923 for your free book. That's 1-800-961-1923. Call now.
This is Chef Gavin Murphy with your 1-minute healthy cooking tip. For all my fellow fitness freaks out there, eating lean, high-protein meats like chicken, turkey, or even pork loin is part of our everyday diet. I get asked all the time, how do I make chicken breast juicy and not dry and overcooked? This is how. Season the breast with salt and pepper and sear in a drizzle of olive oil in a hot pan until golden on both sides. Preheat your oven to 400 degrees and place the breasts on a foiled oven tray. Pour 1 cup of chicken broth on the tray and pop it in the oven for 6 to 7 minutes. What's going to happen is the broth will create steam in the oven while the chicken is cooking and add moisture to the meat. And that's my secret. Also, very important, guys, once you take the chicken out of the oven, let it rest for 3 to 4 minutes, and this will also keep all the juices in the breast. For more tips and information on me, go to my site, gavinmurphy.com.
And we are back on Money Never Sleeps. The topic for this half of the show is the inevitable minimum wage hike in New York. And I want to lay it out for you, the good and the bad as I see it. Now, the proposed minimum wage hike is $15 an hour. Now, I say proposed, but look, the reality is this is happening. I mean, it's proposed, it's done. I mean, this is like a done deal. It's just not done, but it's done. It's as done as you're going to get. This is, I mean, there's not much that's going to stand in the way. That's the whole point. That's why I say it's done. Because, I mean, look, you have, New York Governor Cuomo. He's already doing a celebration dance since, this happened at some point today. And the reason being is that this was high up on his agenda since he took office, and this is a victory for him and his office. So this is supposed to be phased in over a couple of years. And right now it's solely for the fast food industry. And that's important because, they were able to push this through because they targeted a specific industry. And they had the leaders in this specific industry on board with this. So they didn't have to get certain approval. So they were able to fast track everything and really make this happen, which is really interesting. It's a political thing, and that's a little bit above what I deal with. I'm not going to get into politics on this show. And now it's again solely for the fast food industry, and it's only for those companies that have over 30 locations. So that includes your McDonald's, Burger King, Wendy's, Dunkin' Donuts, I'm assuming, Starbucks, Chipotle, Panera Bread, and the list goes on and on. There are a number of them. Now, the good part of this is that it will allow fast food workers at one of these chains to earn a livable wage. The minimum wage now is kind of sad, especially in New York, with everything being so high. And it does force some of these workers to have to also rely on welfare. You have a job, but then you have to go on welfare because you can't afford to buy food or pay your rent and so on and so forth. But meanwhile, you're working. So that's crazy because you want to work. You have a job, but you still need welfare because you can't afford to live without it. So, when you can't afford to pay the skyrocketing rents, feed your family, and this is just over the top. So for that, I'm all for this. Giving workers an opportunity to use, a minimum wage job as a catapult to something better, as opposed to being stuck due to the low wages. I'm all for that. Kudos to Governor Cuomo for making this happen and pushing this through. All right, it is a big victory for the everyday man and woman, the person that's working at a fast food chain that's not looking to stay there forever, but using that as a vehicle because maybe they're going to school, maybe they're doing something else to get a trade, and that's just a pit stop while they move forward. And it's a hell of a lot better than going and just solely relying on welfare. They're actually trying to do something, and I commend them for that. And again, kudos to Governor Cuomo for making that happen. Now, let's move on to the business part of this. Now, the big fast food companies will have a chunk of their earnings impacted potentially by this. So this may mean increased prices for consumers. Could happen. So the dollar menu may be $1.50 when it's all said and done in New York. But I have to assume that the state will give some type of tax incentives to kind of soften the blow for the fast food chains. So maybe it'll offset some of the, some of the costs. I don't know. But, it is possible. Now, this is the bad news, and it's for the franchisees, and I feel for them. Because whether they own 1 or 20, keep in mind, you don't have one person owning everything. So you may have one guy that saved up enough and was able to actually go and get a franchise. So whether they own 1 or 20, it doesn't matter. They're all getting clumped together into the same pile. So there's no escaping it. So let's just paint this picture, okay? Let's say you're a Joe owner and you have one McDonald's franchise, and your neighbor, your best friend, okay, he's making as much as you and bringing in as much revenue in his business as you are, okay, but your best friend, Jack owner, he has a fast food joint doing as well as your place is, but he's in a fast food chain with under 30 locations. Well, the McDonald's franchisee will get hit with that $15 per hour minimum wage, while for the time being, his best friend won't. So that's why I feel for the franchisees that may have 1 or 2, and they're getting clumped in with everyone. So I don't know. I mean, this is the way it is. This is what's happening. So what this potentially can do is hurt a lot of these franchisees. It may force them to hire less workers, to keep the cost down. Again, we don't know what's going to wind up happening. All right. Now, listen, these large fast food chains, they're money-making machines. There's no doubt about it. No one can debate it. They've been making money for investors for a long time. And they're able to absorb the minimum wage hike. And that's fine, if you're giving people a livable wage. But again, we're touching on the business part of it. Investors in the stock itself, and I'm talking about institutions, individual investors. They may not see the profits that they're accustomed to if states don't offset the hike with tax incentives or if the workforce isn't trimmed down or something. Again, this is all possible. And this is only the beginning, and I promise you that legislation won't stop until, there is an across-the-board minimum wage in New York for every industry. And I'm sure that this will set the tone for the rest of the country. I know certain states have implemented this already, but for New York to do that, look, the reality is New York is the gold standard. So for them to do that in New York, it'll set the tone for a lot of other states. I promise you on that. All right. And before I close out the show, what I want to do, I want to piggyback on yesterday's show by mentioning that Twitter's Periscope, they made the announcement that they're looking to initiate landscape broadcasting. And I was talking about it yesterday on the show. What Periscope can be used for and how it can be a benefit for the media outlets, for celebrities, for musicians, and having this landscape broadcasting is pretty cool. That means that the live streams will be able to be seen on television sets properly, as opposed to just a third of the screen in the middle, because you have to hold your phone, your mobile device upright, and that's the way it films. Okay, but now they're going to change it. They're not going to get rid of the live broadcast. They're adhering to that. They're not allowing you just to record and that's it. You have to broadcast live. And that's the whole purpose of Periscope. Real time. You connect with people in real time. So that's what they're looking to do. So if they offer this as an option, it will be a game changer for the media, for sports broadcasting companies, and so much more. And it will begin to be a game changer, as I said yesterday, for Twitter itself. Everybody is talking about Twitter being taken over and all this other jazz. Look, I'm just over it. I don't see Twitter getting taken over. I think it would be a ridiculous move, because they're on the cusp of doing something great. They made a great acquisition with Periscope. They make a couple of other good moves, and then they're back in the game. Okay, and also another big victory in New York was for Uber in New York City. The city was trying to curb the growth of Uber due to the environmental concerns. This is what they said. I think it was more of the fact that yellow cab medallions cost close to $1 million. But that was they were leaning on that. The environmental concerns with so many cars on the road, that was the big thing. But either way, at the midnight hour, they agreed to a 4-month study of the environmental impact of all the additional cars on the road. And they will not limit the number of Uber cars that can join their force, which is a good thing. And we talk about jobs, you talk about people working, and I'm going to go back to someone like Lynn Tilton, who's actually creating jobs in this country. You have other entrepreneurs that are creating jobs in this country, which is fantastic. These new tech companies, they're creating jobs. They're hiring people. They're getting office space. You have even Tesla doing, they're growing their business. And then also, people talk about, no jobs out there. If you have skilled labor, you have companies like Boeing that say that they're going to need so many engineers, so many workers to work on the next generation of aircrafts. So the jobs are there. You just have to have the skills for them, and then more jobs are being created. Okay, and Uber, what they're doing is they're allowing individuals the opportunity to either supplement their income or build a business, via Uber. All right. And listen, for me personally, after getting ripped off by a yellow cab at JFK not too long ago, I mean, like, I got ripped for about $1.25 for a $60 ride. Okay, yeah, I wasn't happy about it, but at 2 o'clock in the morning, well, I just wanted to get home and just relax. But the thing is, where are you going to find a cab at 2 o'clock in the morning? Okay, well, if I had Uber, maybe, just maybe, it would have helped me with that dilemma and helped me solve it. So I think that was a good deal with Uber, keeping them in motion, because I think that, again, we don't live in a stone age, we live in a digital age, and this is the future. You have Uber, you have Lyft, you have these companies that are changing the game, and that's what it's about. We gotta change the game. They're having in Michigan, I believe in Detroit, they're creating a town that they'll just have solely, the self-driving cars. And that's going to be pretty cool. And I'm sure they're going to add more components to that town to test all the new technology. And that's going to be that's going to be pretty great, because, sooner or later, all this stuff will be implemented. And, what Uber, and let me just go back to Uber real quick. What Uber was saying, it was either Uber or Lyft, but they were saying that the millennials, that in the next 5 years, a lot of millennials won't even have cars, because you'll have a service like Uber or Lyft to actually travel around. So that's interesting within itself. Okay, so anyway, that's about it for this episode of Money Never Sleeps. As always, you can listen to the past shows on MoneyNeverSleepsRadio.com. And if you have any topic requests or any questions or anything, feel free to email us from the website, or go to Twitter, or you can easily reach out to me if you have any comments, or if you have any suggestions or anything. And I listen to our listeners. How do you like that? Because we do this show for you. Okay. And again, that's about it for this episode of Money Never Sleeps. And I hope that all of you have a profitable rest of the trading week. And we'll be back with you tomorrow with another show.
Initiating shutdown sequence.
You're listening to UCW Radio. In your face.
What is your major malfunction?
So let it be written. So let it be done.
Ladies and gentlemen, my mother thanks you. My father thanks you. My sister thanks you. And I thank you.
All opinions expressed by Luis Velasquez on the Money Never Sleeps radio show and its website are solely his opinions and do not reflect the opinions of the UCW radio show or their parent company or affiliates, and may have been previously disseminated by him on television, radio, internet, or another medium. You should not treat any opinion expressed by him as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. His opinions are based upon information he considers to be reliable, but neither the UCW radio show nor its affiliates, parent companies, and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. The UCW radio show, Luis Velasquez, its affiliates, parent companies, and or subsidiaries are not under any obligation to update or correct any information provided on the radio show or on the website. His statements and opinions are subject to change without notice. No part of his compensation from the UCW radio show is related to the specific opinions he expresses. Please read the full disclaimer on MoneyNeverSleepsRadio.com.